I've got some things wrong over the last few days, and it might be coming time for me to admit defeat and accept nearly a 5K loss on my leveraged Bitcoin long position. But there are some metrics pinging in the market right now which make me think that it is the right decision to hold this amount of risk. And I want to explain to you today why I justify staying in this underwater position and why I think things are looking up from here and why that plays into my broader risk management strategy. So let's get right into it. So here we are, Bitcoin trading at a price right now of $109,214. We saw a nice little slip last night, back down beneath this wick that we saw yesterday. This wick was brought up really quickly. I made a video yesterday speaking about how we were forming a nice floor of support around the $110,000 region. And the way we wicked up from this breakdown beneath that basically gave me signs that there was a lot of liquidity down there and that the market wasn't really ready yet to break that floor. But clearly, over the last few hours, that floor has gone and we're now trading at a price of $109,250. We did break beneath that wick. Here I'm on the Coinbase charts and you can see we've now built some value beneath those lows, which isn't looking so good. If we take a look at BTCC here, you can see I'm currently underwater on my Bitcoin longs from an average price of $114,613. So why do I justify staying in this underwater position? Now, the reason for that comes back to, you guessed it, liquidations and the liquidation risk that the market's facing right now. So once again, we know that this massive down move was driven by liquidations. Okay, $19 billion worth of cumulative long liquidations went through, causing forced selling on the market and this massive dump. And the catalyst for that was Trump threatening further tariff increases on China. That was just the catalyst though. The reason this happened was because of excessive leverage in the market, and this wiped out a huge amount of that. But we do still see people coming into the market over leverage, and we do still see people being liquidated. You can see over the last 12 hours, $176 million of longs liquidated, and over the last 24 hours, $535 million worth of long positions liquidated out of the market. That is over $500 million worth of longs liquidated in the last 24 hours. And just to be totally clear, that is this move, this wick, and this move here. But what we keep seeing happening is this resetting. Every time that happens, the market gets more scared. And cumulatively, more and more people jump short. So you can see this in the sentiment. Okay, today we are at 28 out of 100 on the fear and greed index. That is very much in fear. The market is scared at the moment. And sure enough, you can see on the liquidation map, once again, we're stacked to the upside, okay? There are more shorts in the market right now. That is on the daily time frame, that is on the weekly time frame, and look at this on the monthly time frame. Massively more shorts in the market, and that is peaking out at nearly $5 billion worth of short liquidation risk to the upside. Sure, that's at very high prices. That's at $123,570. It seems a long way off right now. But on the flip side, $110,000 clearly was incomprehensible to most of the market when we were breaking all-time highs just towards the end of last week. The market can move very quickly, and it will continue to move very quickly as long as people keep jumping in on leverage, as they keep doing, right? It's pretty spectacular how people aren't learning from this and how they've still got money to waste on this. The point is, we keep seeing this flip, right? Every time there's green shoots in the market, okay, we start getting little up moves like this, people jump in long and they get liquidated. And every time that happens, every time we don't rip to the upside, more and more people are going to jump in on those short positions. And that means that this risk, this short liquidation risk, is just building massively to the upside day by day. Eventually, when this comes to bear, if we get even a small move to the upside right now, moved up just a couple of $1,000s to 111,000, that would result in $300 million worth of shorts being liquidated. And this chart kind of levels out, we'll say, about $113,500. That is worth nearly $1 billion worth of short liquidations. It's really not very far ahead from where we are right now. Okay, there is a massive short liquidation risk at prices very close to the upside. And that long liquidation risk is just petering out to the downside. Now, that's not to say that prices couldn't slip from here and we couldn't see more pain to the downside. That could absolutely happen, right? That could happen from real selling pressure, from people selling spot Bitcoin. And it could happen, prices could be driven down by the shorts as well, right? I've spoken already about the Trump insider wallet, as people like to describe it. This is the wallet that jumped in short just before that tariff announcement. They've taken another short position, and big public shorts like that definitely play into this this overarching story and rhetoric of fear in the market. But as I've said before, and as I will keep saying, those are the times that historically have proven to be great buying opportunities. These times of darkness and fear have almost every single time without failure proven to be absolutely massive buying opportunities. I've got two key dates marked on the chart here, Friday the 31st of January and Wednesday the 2nd of April. And even if we take an average of that, right, an average of the sell-off from when Trump started threatening tariffs, you can see, even to prices right now, we'd be up 22%. And to the all-time highs, as I've quoted already, over 40% up. So the point is, it's not supposed to feel good buying into fear. That's why you're buying into fear. Okay, you're supposed to be somewhat questioning your own sanity and your own levels of hopium and your own levels of cope and how you're justifying getting long into these sell-offs in your own mind. That is why it's difficult. That's why not everyone does it, and that's why not everybody gets to enjoy the upside or the potential upside from buying into these dips. And that is why I'm staying in this position. An above average risk profile, I would say, for the way that I like to trade, but this is very much an above average opportunity in the market. So I am currently looking at an estimated liquidation price of $102,500. That would put us about 7% down from where we are right now. And that is more than possible. I'm considering right now actually adding margin to this account, and that means that I can continue averaging down into this move. In the context of how rare it is to see massive drops like this, and I was about to say beautiful, massive, big drops like this because it really is a beautiful opportunity. For me, that is worth doubling down on and really leveraging into. As I've said before, even if we saw a break of the wick, right? Even if we saw a break of lows, I mean, look at the floor that's forming down at this $107,000 level. Even if we saw a break of support there, that would mean to me more pain on the market, more fear in the market, very, very probably even more shorts jumping in. And all of that basically just builds into the overarching picture that this becomes a bigger and a bigger buying opportunity. The more shorts that pile in, the more short liquidation risk there is. Any sort of buying on the market, any sort of spot buying that starts pushing prices up again brings all of those shorts into question. At the moment when people think that this can't get any worse, that is the moment when it's going to start getting better, and that is the moment we're going to see a massive rip to the upside if history repeats itself. History doesn't tend to repeat itself, but it does tend to rhyme. So the signals that I'm getting now, in summary, are basically there's not a lot more long liquidation risk to the downside, okay? Sure, we could see like $500 million worth. That's where this kind of peters out at about $105,500. But the way that this seems to be going right now is we'll bleed down a little bit. Those longs will get shaken out. More shorts will jump in. And then again, every time that happens, more people get short, more people pile in on leverage to the short side, and the risk goes up and up and up that those shorts are going to start becoming liquidated and start becoming forced to buy into the market. We've already established that the big institutions, big players in this market, like buying at depressed prices. We've already established, look at this, that the accumulator wallets, okay, these are wallets that historically buy Bitcoin and don't sell Bitcoin. The amount of Bitcoin in terms of numbers of BTC in those wallets is about to surpass 3 million. And look at the trend, right? They just keep buying more and more and more. So the smart money, as far as we can tell, is accumulating. The smart money loves accumulating Bitcoin at these lower prices, and the smart money loves buying into fear because basically they've got the bankroll to be able to afford that. So as much as you can afford to act like those guys in the market, as much as you can afford to behave in the way that they do, that gives you the best possible opportunity of getting to win like they do. And that is why I think it's worth staying in this risky position. That's why I'm willing to post more capital to keep this position afloat. And it is why I continue to add to my spot holdings, because times like this are the only logical time to be adding to your spot holdings. We never really want to be buying unless it's very short term, when the market is feeling euphoric and the market's feeling great and everyone's getting all excited about crypto and about Bitcoin. And just look at this contextually. How recently were we breaking all-time highs? Back on the 6th of October, we put in a brand new all-time high. It is only the 17th of October, and now the whole market's in fear. It is really, really quite stunning to me how much of an opportunity we've been presented with here, where just a week ago we were breaking all-time highs, and now everyone's scattered and in fear and panicking. That is the perfect scenario to be accumulating more Bitcoin. And that is not to say that we couldn't go down from here. We absolutely could bleed out from here. There's room for more pain in this market. But as that increases, so does the buying opportunity, in my opinion. But of course, that is purely my opinion. Please don't copy what I do. Please don't consider anything I say financial advice, because it is absolutely not. I'm just sharing my opinions with you for entertainment purposes. Plenty more to come. Thanks for watching. Catch you in the next one. Bye.